finish this. Market update on the 21st FOMC day, 75 basis rate hike from Powell, and we get a sell-off ultimately down to 377.39. Basically hit the target I've been talking about, but I'm going to go into that more here in a second. Do I think that my original charting is going to end up being correct? We'll get into that here in just a second. The VIX spiked to almost a little bit over 30 and then came back down. It doesn't necessarily mean that that's a top, but I would think that it probably is. Doesn't mean we can't go down lower, because the VIX, if it stays in the high 20s, we can still go down lower, even though it's not as high as it was. But a lot of people are super bearish now, and I understand why. I mean, everything that he said, I mean, everything's pretty bearish right now, like sounding. But the chart is still staying between the parallel lines for this ABC move. And so I'm still holding on to my thoughts that we're going to go higher here in October. I don't know how high we're going to go at this point, but I could see us going A, B, and then doing a double top here at 430. That's a very good possibility. Until the market shows me that we're in an impulsive move, we're still in a corrective move. It's got to break this parallel line. Like if I go back here to, let's go back to like this wave right here. So we had a 5-wave move and a second wave right here. Okay, you draw a parallel line right there. And see how this just breaks it convincingly? That's a 5-wave move right there. What are we doing here? A down, B, still within the parallel line. So you can't convince me that this is not a corrective move right now. This is definitely corrective. Until if it breaks down like crazy, then yeah, I'll say it's an impulsive move. But for now, it's corrective. With that being said, though, going in on the 15-minute time frame, I'm going to go over two different possibilities, because I think there's a possibility that my chart from yesterday and I had for a while is not actually correct. And you know, there's a few different like technicalities that were kind of like iffy anyway, but currently my chart is 1, 2, 3, 4, and we're in the 5th wave. If you take this right here, 396.22, and the bottom here at 382.09, I think. So 396.22 minus 382.09, you get 14.13. The high today was 389.36. So 375.23 is how long on this projection it could go. So I have that marked right here, 375.23. If it breaks that, it invalidates the whole chart, because this 3rd wave would be the shortest wave, and Elliott wave, 3rd wave can't be the shortest. So I'm watching 375.23. If it does break that, then I think there's a better way of looking at this, and that better way is this is actually an A wave and this is a B wave. The technicalities of the ABC work better anyway, because this B wave didn't bounce to the 50% retracement. So I think it's a good chance it's A, B, 1, 2, 3, 4, 5, 1, A, B, C, 2. If you see this chart, we had A, B, A, B, C, B, C, overall B wave. So A, B, C. And if you look at the retracement on this too, another thing I wish I would have noticed, that's the 1st wave and this is a 2nd wave. Look at where this 2nd wave hits, right at the 50% retracement, and immediately goes down. And that, look at that, that's a 3rd wave right there. So I'm like actually kind of annoyed that I didn't have this earlier, but it appears like this might actually be more accurate. And let's see how far this would go down. So on that move, we got a first wave, second wave, and then it looks like we have a third wave here. So 1, 2, 3, 4, 5 for a third wave. Let's just say the third wave has ended right here. We'd be looking for a bounce to 380, and then we'd be looking for we'd be looking for 374.18 all the way down to 372.74, and that would be the overall third wave. So we'd have, it should be labeled I'm sorry, I don't need to label those actually. So we would have 1, 2, 3, 4, 5 overall third wave. So zoom back out, we would have 1, 2, 3, and then we would have a bounce. Well, actually, let's look at the overall 1.61 fib of this first wave, and it comes right in the middle of where I have projected. So let's just say we go down to the 1.61 fib here at 373.38 for the overall third wave. We would bounce back up here to about 377. And then, look at that, our target would be right around 366 to 364. Zoom back out here, 4-hour time frame. Where were we at in June? 366, 364. So that's a pretty convincing way to look at it. All the fib retracements are perfectly, the pullback for the second wave was 50%. Third wave would take us to 1.61 pullback. It's a perfectly aligned ABC pattern, and it would stay in between the parallel lines if, say, we ended it possibly in early October. If we barely break outside of these, I'm not going to worry about it that much because this doesn't look like an impulsive move anyway. So that's kind of what I'm leaning towards if it breaks my invalidation level of 375.24. But that one is still a possibility. It would just need, for that to be valid, it would still just need to have a bounce. Go back in here. 1, 2, 3, bounce, and then hold 375.24. And that's very possible too, because you have a lot of options expiring around 375, I think, this week. It could bounce and just stop right here and then start going up. That's a possibility too. We'll have to just see, because this next bounce is going to be, let's say the third wave ended right here. The next bounce should take us to about 380. And then if they just want to come down here and barely break the third wave and it holds this level, then that's the end of it right there. So those are two different possibilities, and pretty much the only possibilities I see for this move down, unless we just get some crazy sell-off where I have to change this to an impulsive move. In that case, we'd probably be targeting our C wave down here in the low 320s. But as of now, I'm still holding to A, B, C down here in either 375, 376, or double bottom here June lows, and then we melt up for the overall C wave. And to complete the overall B wave, maybe going into tech earnings in about a month or going into midterms in the early part of November. So yeah, that's pretty much what I see. So either 364 to 366 or above 375, basically. If we go to the VIX, another thing that's pretty interesting is the VIX if you watch my videos, I've had it targeted to go to 33 for a while. Again, parallel lines, doesn't break outside of them, spikes all the way up to 30 and pulls back is at 27.98. That is pretty bullish in my opinion, because if we zoom in here on the 1 hour time frame, you can see 1, 2, 3, A, B, C, 4, and then we get definitely our fifth wave right here. And so this could technically be A, B, and then obviously C right here, because that's not an impulsive move again. And so I could definitely see, and I can definitely see coming down again. So that's verifying what I'm saying with SPY. And then yields and then dollar. Let's go to those. The dollar hit at 111 today. What's it at now? 111.35. Wow. So dollar, again, I think that at this point, the expanded flat is out the window, and we'll see when this bottoms, but at this point, we're still just waiting for the fourth wave, and it's just a never-ending pump. 1, 2, green candles for now a year and a half. So very, very interesting here. I don't know what to say about the dollar, but it's just going to keep on pumping, I guess. Hopefully it comes down here sometime soon. It's got to top here soon, I would think, but who knows. Let's go to the yields. Probably the same thing, I'm guessing. 3.7, what? 3.53, actually it came down. That is a lot better than it was at. Is that 3.63? Okay, well, this still has a chance to be an expanded flat. If it doesn't break 3.72, still can come down here to our target of 1.92%. But I mean, the dollar and the yields have got to turn around for the market to melt up as well. So we're looking for the dollar and yields to come down. But you know my targets for SPY. I'll put the key takeaways in the description. And hopefully you made some money today. Tough trading day. I traded a little bit, made a little bit of money, but mostly from selling options. I didn't really do that many SPY options, buying them at all, because of the nature of the moves, the volatility. You can get stopped out real easily in these kind of days, and it's just not a day that I really like trading that much, because you know, you can look at the chart correctly and still get stopped out. So anyway, that's pretty much all I got for today. Look for the key takeaways in the description if you want to know the key targets and the key levels. And please like and subscribe, and I will talk with you tomorrow.